All right, trade pros, good morning. Welcome to the morning market update for Tuesday, March the 26th, 2019. I hope the lighting situation is better today. We're going to commit to having better quality going forward. So please comment first and foremost in the description or comment in the YouTube video and let me know if this makes a difference or not. I should be well lit. I'm actually in danger of getting a tan with these two lights. All right, hope you guys are having a great day, great morning so far. We're about to kick off another day of trading. We're really excited. There's going to be a lot of opportunity today. Equities are pushing on highs. Oil is also trading higher, and bond yields are moving higher also after having quite a sell-off and the 3-month and 10-year even inverting to negative territory. All right, I don't think the troubles are over, but I do think there's a lot of development progress, and the market's trading in a little bit of excitement mode this morning. I'll explain why. First, let's start with the morning market fun fact. And this day in 1979, OPEC raised the price of oil by 9% in one day. All right, from $13.34 a barrel to $14.55 US per barrel of Western Texas Intermediate crude, WTI. All right, that's a huge increase. And it's interesting that they were able to raise the price just like that. All right, that's why they're called a cartel. It's OPEC. All right, the beginning, it's started off the beginning stage of a massive inflation spike in the United States. In 12 months, oil prices went from $13.34 to $39.50. Any of you that are watching this broadcast will remember those days. The shortage of gas, everybody was at the pumps. They pushed it up, the price, and the annual inflation surged to 11.2%. Imagine every single dollar that you put into a bond going up 11.5%. Well, look at this. Annual interest rates are actually 15.2%. So huge interest rates, but also because there's bigger inflation making prices more expensive. So in that environment, you had to save in order to put money to make the 15% so you could offset the loss of your purchasing power by 11% the following year. Interesting environment. Oil prices peaked in 1980 and then began a slow decline over the next 20 years. That's a key example of how OPEC's involvement created volatility, not just in the oil price, but the overall economy and instability. So interesting stat that happened today, many decades ago, 1979. Let's focus right now on Apple's huge press conference yesterday. It was highly anticipated by investors. It was also highly leaked. And I'll tell you this, there were no real surprises that came out in yesterday's press conference. It was a little bit underwhelming based on what investors and the commentary out there is from key shareholders. They were underwhelmed. They were expecting more. And all of the things that Apple talked about were actually already leaked before the event. But anywho, here's what they came out with. They introduced two really exciting products and a third, which is a gaming platform similar to Google. But we're going to focus on the first two because I think they have the potential to make the biggest splash in the market. So they came out with a new product called Apple TV to allow video content sharing and streaming. All right. Oprah was there for the event, for the launch. A lot of celebrities talked about their upcoming shows with no clips and no other details. All right. Executives said that they would have content from other platforms. So it'd be a curated content platform. They'll have a mix of their own original shows and then some from outside, including HBO, some from Amazon Prime and the likes. All right. No additional details. The difference between Apple's TV Plus and Amazon Prime, a lot of members said, hey, this is going to be a Prime killer or a Netflix killer even. The difference between all that is that Amazon Prime's got a huge network, all right, and they're able to offer that service for free. I have Amazon Prime. How many TV shows have I watched? Probably one or two on Amazon Prime, but I don't watch too many shows to begin with. So Amazon Prime already has the network. It's interesting for Apple to launch a streaming TV service with no back catalog, meaning that they don't have content already available that they've worked on saying, here's Apple TV, here's a new hit series with yada, yada, yada celebrities, and get excited to get onto it. They don't have a back catalog at all. So it's a very preliminary announcement, and it's a little troubling because that's not how Apple's used to doing business. By the time they announce something, they have all the details. Investors walk away excited and happy. This event yesterday created more questions than it did provide answers. All right, here's the interesting part about this. Apple TV Plus will not be free. There will be a subscription cost. And the market for subscription streaming services online is that 4 in 10 adults who want to binge watch a series will sign up and then cancel after that month. So it really creates a responsibility on behalf of the company offering these services to always have fresh content. Here's the thing about fresh content. It's really freaking expensive. That's why there's so few studios in Hollywood that pump out these hits. It takes a lot of money to create content that these days is being binged through faster. Remember when there were actually series that would go on for a whole season and you'd have to wait a whole week for the next episode? Well, in this environment of we want everything now for as cheap as possible, these shows are watched through in a week. So something that takes months to create, to post-production, edit, to pay the actors, pay the content licensing, to arrange the actual upload of it, all right, to host it, to do all these other things are just being watched in 1 week. And that's sort of the troubling trend. And also that I see a lot of members jumping on initially and then canceling if there is an abundance of shows, which costs a lot of money to create. Just ask Netflix. Look at their statements. They spend an enormous amount of money to bring these shows online that we just sort of watch through and like, meh, give it a 2-star rating. So this is sort of the market they're jumping into. Apple was down 1.21% after this announcement. Netflix was actually up 1.5%. So it's really showing the propensity here for the market to say, you know what, we don't think this is going to compete with any one of the two. And it could, because Oprah said herself, there's a billion devices in the pockets of iPhone users. All right. The other thing that they launched yesterday announced was their highly anticipated credit card. We know that they were going to have an Apple credit card. It was dubbed a very creative name, the Apple Card. All right. Has no fees, daily cash rewards, and they give you 3% cash back on all Apple purchases of products and services, 2% cash back when you pay for anything using your iPhone, and 1% cash back on all other purchases using just the card. And it's underwritten or supported and partnered by with Goldman Sachs. Their logo, Goldman Sachs, will be on the back of the card if you flip it over, the Apple Card. They're partnered with them. And the interesting part is this seems like a really big data collection effort on consumption spending. Right? These companies want to know where you spend your money. Why do you think they give you a cash reward? All right, because you're providing valuable information. Oftentimes, I tell people on this broadcast also, if you're not paying for a product, you are the product. And that's sort of how Business 101 acumen works. So that's Apple Card and the new streaming service that they announced, 2 big products as they're fully now engaged and invested in becoming a services company. Obviously, their iPhone headset units are slowing down. That's why they chose to not report iPhone sale units anymore in their earnings reports. Very controversial decision. People were around there wondering why, and I told you the next morning why, because they don't think they're going to sell as many, and it's not as sexy and exciting to report these massive unit sales when they're declining or at least peaking. Apple's entering into a maturity phase, and they need to invest and build out other businesses. They need to innovate. They need to put a lot of their money into the R&D department to come up with that next product. There's a lot of pressure on them. And this is 2 things that they've released, 3 actually, with the video gaming services platform. Comment if you think this is a good move for Apple to launch the card and also launch the streaming service. I'd love to hear from the Apple users, and I'd love to hear from all of you. How do you think this will impact Apple? And 10 to 15 years from now, was this a good move yesterday or not? Please, please, please comment. I'd love to hear your input. I rely on what you guys are feeling as well to create these updates, and I want to make it relevant for you. All right, that's Apple. Moving on and shifting gears to the UK, out of the latest, the Brexit process. This has gone on to a full kerfuffle. Parliament takes control of the Brexit process, taking it away from Prime Minister Theresa May. All right, after she admitted that her Brexit deal didn't have enough support to put it to another vote. She basically said, look, we voted on this twice. The 3rd time, nothing much has changed. I don't think there's enough support. All right. And so that basically means that there may be a no deal scenario coming up. And Parliament is going to have to make a decision. So tomorrow, there's going to be another vote out of the UK. And this one's going to be the most important. What happens from here? Theresa May said that she won't lead the UK over a no deal cliff without Parliament's consent. Basically, she says, all right, you don't like my deal, over to the Parliament. How do we move forward? And if you want me to go through and negotiate without a deal, or not negotiate, but if you want me to go through a no-deal Brexit, which is going to be massive uncertainty for the economy, for trade, for everything, then I'll do it, but the Parliament needs to vote on that. So now that it's up to the Parliament to vote on a number of options. Here's what we think the options are going to be, all right? One of the options that's going to be up for the vote tomorrow is allowing the people of UK to have another Brexit vote, all right? A second referendum vote. Basically saying, yes, We leave the European Union. No, we stay. And that's going to be the one that I think markets are the least excited about, because that has the most uncertainty. Because in a year's time after the referendum, we could just be in the same spot anyways. All right. The second one is staying in the customs union and the single market of the European zone. And that's the second vote. And the third one is just canceling Brexit altogether. Parliament does have the authority and the power to cancel the Brexit vote. It's going to be challenged in many ways. I'm not 100% sure if it'll be court challenged, but I'm pretty sure that somebody will try. All right, that's the thing about the courts. It's worth it. If you have the money and you want to give it a shot, you could try legal action against almost anything and anyone. So sterling on that news, the British pound is up about 0.3% because it's in a way getting some resolve, right? We're at least getting closer to something. The March 29th deadline, I mean, the Brexit is supposed to happen, the 29th deadline's in 3 days, and they're likely not going to have a satisfactory deal in time. This is going to get extended, pushed out further past April 12th, the deadline given by the EU, past the end of May. I'm seeing this as a late summer sort of event, all right, whether it's a referendum or whatever it is. That's what we're looking at. These are the major movers of the market overnight. In Asia, Japan's up 2.2%. Strong rally in Asian equities. Hong Kong's flat, though. China's down 1.5%. India's up 1.1%. So you're having some interest to the upside here, primarily in Japan's Nikkei 225. In Europe at midday, London's up 0.3%. Paris is up 0.6%. And Frankfurt's up 0.1%. And in the United States, the futures are looking as follows. Dow is up 0.5%, S&P is up 0.5%, Nasdaq's up 0.4%. We've cleared the overhead resistances from yesterday. In yesterday's trading session, we started out by selling rallies. We looked for the downside. We capitalized on that opportunity in the trading room, and now we've broken above resistance. Now we're back to a bull market move. So I'm seeing some more upside today. Today's going to be a buying the dips type of environment, at least early on, up until the European close. Then the afternoon's a whole separate session. If you don't know this, I'm going to teach you something important right now. The morning session from 9 to 11:30 in the morning Eastern is one whole session. And then from around 1 to 4 p.m. is an entirely different session. Different people trade in there, different outcomes, different styles and approaches. So if you split that session into two, you're going to start to see some magical things happen. All right, crude oil is up 1.3%. Strong bid overnight. And we've almost touched the 60 level. In fact, we're up at 60.20 and pushing higher on crude. Gold's down 0.7%, and Bitcoin's up 1.5% or down 1.5% to under $4,000. In the economic calendar today, Fed's Harker spoke in the European session, 3:45 a.m. Housing starts was at 8:30 in the morning. I heard something. I heard the squawk in the back. He talks to me, and usually I listen. Housing starts came out at 1.162 million versus 1.21. A little bit of a miss on the housing start number. Building permits were also down to 1.296 versus 1.305 million. And the market reacted by selling off a little bit, but the prior month's number was revised higher from 1.23 to 1.27 million homes. All right. And the housing starts number is a leading indicator because that's just these builders are creating new projects that they anticipate to sell, obviously. If they didn't anticipate selling them, they wouldn't start building these new houses. So we're getting a little bit of a miss there. Another softer economic data point this morning. At 10 a.m., we have consumer confidence. All right, between 8:55 and 9 a.m., we had 3 reports that I don't know the numbers to because I turn around and talk to you. Consumer confidence at 10 a.m., Richmond Fed manufacturing survey at 10 a.m., 1 p.m. results of a 40 billion 2-year note auction, and 8:30 p.m. Rosengren is going to be speaking from the Federal Reserve. So we have a lot of Fed speakers, some data points here at the top of the hour, and we have markets moving higher and seeing some volume coming into it early on in the session. It's all about the U.S. Open, however. Remember this. What's the difference between 9:29 and 9:30 in the morning? A huge one. Most institutional investors wait till the opening bell to trade because there's more volume. And more volume means they could get bigger trades off without slippage or at a better price, at a better fill. Why does that happen? Because everyone waits for the opening bell. All right, it's kind of a self-fulfilling prophecy. So wait till 9:30, establish direction, establish who's in control, establish at what level you'd like to be part of this, and then also what you'd like to see specifically before you get into a trade. You're only answering 3 questions on a daily basis as a trader. But my gosh, are those 3 questions hard to answer on some days? All right. And I'll admit that to you. Some days it's easy to see the trend and sentiment. Other days you got to be a little bit patient for longer, and you may miss the first parts of the move, and that's okay. Catching the second half of a move with higher probability is a way better trade than jumping in there right off. As soon as the gun goes, you just give it your all and you get exhausted halfway through and everyone passes you. All right. So in this business, there's only 3 words that I break it down to, and it's PDD, patience, right? You have to be patient first and foremost. It's not about being in a trade, it's about being in the right trade. We don't get profits by knowing where the market's going. We get paid by jumping on board when the probabilities are high, yet still risky enough that others aren't in, right? That's the secret sauce of trading. Patience, diligence, discipline. You build your life around those 3 qualities, not only will your trading change, I guarantee your whole life will change. The best thing about this business is being a great trader makes you a great human and vice versa. You can't say that about other 9-to-5 jobs. I've worked 9-to-5 jobs before in the finance industry, and I can tell you they didn't really make me a better person. All right. In fact, they made no one a better person. Our clients didn't really make a ton of money from it because it was self-directed. All right. The brokerage wasn't wildly successful, and I wasn't innately satisfied either. So it was a lose-lose-lose scenario. So much happier in this business. I love what I do, and I love you guys. You guys take care. PDD, and I'll see you tomorrow morning. Hope the lighting was better today. Have a great rest of your days. I'm going to turn around, open up the trading room, talk to the trade pros about some levels, and get in there and trade live with the team. You guys take care. Have an awesome day. All right, trade pros. Let's get into it. Today we're getting a little bit of a bid on the S&P 500. We're pressing here to these overnight highs, these 23.75. Yesterday's close was at the 09s. It was towards the top of the range. Let me just pull out the pen tool to show you some stuff here, and I'll show you a level that I'm waiting for potential high probability, low risk trade opportunity. So let's jump in analysis. I'll cover today, this morning, both the S&P, NASDAQ, and also oil.